Cathie Wood's ARK Investment ETF hit a high of 160 last year. It has done nothing but plummet since. It's currently sitting at $45 per share. She still sees inflows. This is part of the reason why I don't believe we're in a market bottom yet. In order for a company, an ETF, with this kind of investment philosophy, if you want to call it investment, to be down 75% and still have people putting money into it on these overvalued, massively overvalued companies that are just justifiable by being disruptors, that tells me we're not at the bottom. Here's where Cathie Wood's a hypocrite. And if you're new to our channel, I'm Paul, and my job is to be a value investor. And part of it's also to point out where other people are hypocritical in the investment world on YouTube and out there. And Cathie Wood is a hypocrite. She came out many, many months ago and said Tesla was a $4,000 stock. Then there were reports that she was selling Tesla as it fell. That makes no sense. She said that Michael Burry didn't understand investing, and he's a value investor. But then when her ETF fell 75%, she said we're in deep value territory. That makes no sense. Guys, here are her top 20 or so holdings. Let me just go over through it real quick. Overpriced, 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 overpriced. Guys, I don't know how many of these companies even make money. In one of our videos in the past, we looked at the top 20 holdings. Only 17 did not make money. Only 3 were even profitable. She doesn't understand that diluting shareholders, which is what all these companies are probably doing, is hurting the investor. There are certain fundamental beliefs. If you go look at our videos in the past, people telling me, Paul, you don't get it. If she's so dumb, why does she have a fund? It's easy to say that when her fund is up to $160 a share. It's not so easy when it's down to $40, $45 a share. She has been nothing but a joke in the value investing world. In the investing world, you cannot buy at any price. That is what she's doing right here. She's buying all these companies at any price, regardless of where they stand from a long-term value perspective. Guys, stocks are a voting machine in the short run and a weighing machine in the long run. If you've watched this channel before, you've heard me say that because Warren Buffett talks about it. But unlike the other value people out there who call themselves value investors, I actually practice what I preach. This is not value investing. This is hype investing. This does not work in the long run. Can it work in the short run? Absolutely. But I've never seen a hypester ever stick around for long periods of time when they chase the hype. Go back to the 06-07 real estate crash. All those real estate hypesters, not around anymore. Go back to 2000, the dot-com bust, not around anymore. Go back to the 70s and nifty 50s, not around anymore. This is just very fundamental investing. Every investment is the present value of all future cash flow. If you understand that, and you understand that it's possible to overpay for growth, then you probably have the inklings of a value investor. If you just think, like I used to 20 years ago, that if a company is growing, that it's a better investment than a company is not growing, hear me out right now. If there are two companies exactly the same, and one is growing 10% a year, one's not growing at all, which one should you pay more money for? Obviously, the 10% growth a year. I will give you that. But here's what the growth hypesters talk about. This one's 10%, this one's 0. Doesn't matter what you might have to pay for this one. They don't say that, but that's what they're doing when they buy it all the way up. And when they don't factor in cash flow and balance sheets and all these other things that matter in the long run when it comes to investments. Cathie Wood's ARK ETF has a long way to go down if she keeps investments like this going. It will go further down. And mark my words, there will be a retirement announcement at some point in the crash, in the ongoing crash from Cathie Wood. She will deflect from all this and say, you know what? I've accomplished what I want to accomplish. I have more than I need. I'm out. It'll really be her in some fashion either forcing herself out because she can't take the losses, or people that are close to her saying, you got to get out of this thing. This is a mess. Her investments are a mess. I would rather, and I'm not kidding about this one, I would rather have a monkey throw darts at a board and invest in those than Cathie Wood's picks right here. I can assure you, what's today's date? July 19th, 2022. Everyone out there, please write down all these investments and tell me where they are 10 years from now. I'm willing to bet a lot of money these things will not beat the market. There's a good chance a lot of these go to 0. That's what always happens in these kind of markets. Don't confuse a bull market with being very smart. Cathie Wood confused that. She confused a bull market with her intelligence. But the same logic she had when they were going up, saying, see, obviously it works, she's deflecting from that same logic going down. Now, you might say out there, well, Paul, you have losses. I do have losses. The difference is my losses, I look at it and say, this is a mispricing. I want to buy more shares. She's in and out of investments right and left. She has career risk, guys. She has to look like she's active. She's out there marketing. But guess what? When she has 10 or 15 billion in assets under management, charging 75 basis points, her fund is making $75 to $100 million a year in fees. Do you think it costs $75 to $100 million to manage this fund? I can manage this fund on 14 bucks. This is really stupid. Okay, let me just go see what stocks are the most exciting. All right, good, I'll buy them. That's what she's doing. And she puts her models together and, based on this, we're going to expect, she's now saying she expects 45% returns on her investments over the next 5 or 10 years. I remember the exact number. I would be surprised if it's even 4.5% returns. Does this sound harsh? Absolutely. You need to avoid her investments if you believe in that buying a stock is the same as buying a business. If you don't believe that, then sure, go buy this stuff. But when some of these go out of business and there's liquidation, you're going to realize you bought a business, because when they liquidate and give you pennies on the dollar, you're going to say, oh shoot, what happened? Well, you bought a business. You weren't buying just a ticker symbol. That's how you know you're buying a business. Because in a liquidation event, what happens? All the creditors get paid, and then whatever's left over goes to the equity shareholders. Preferred shares first, equity shareholders. This is the key. Cathie Wood's style investing does not work in the long run. She will not be around in 10 years, and she'll say, oh, it's because I'm retired. I did everything I wanted to accomplish. But her track record is terrible. In fact, I just saw something yesterday where if you track her versus Berkshire Hathaway over the last 10 years, and everybody considered Berkshire Hathaway dead, they're even right now over the last 10 years. And Berkshire Hathaway's had one of the worst 10 years of its history. And they're now even. She's underperformed the S&P. And she got in some of these companies very, very early, and she still hasn't performed well. Over 50%, over 40% of the investors in ARK have lost money because they bought when it was going like this. That's the problem. They still have inflows. We have more to go. We have a lot more to go. So if what I'm saying makes sense to you, make sure you subscribe to the channel. Make sure you listen to these things. We have a whole community of thousands of people who talk about what we're doing here, and we have our software to help people understand what to pay for an investment when you finally realize that every investment is the present value of all future cash flow. If I'm going to give you $1 a year for the rest of your life, what's that worth to you? Hell, if I'm going to give you $1 a year the rest of your life and it's going to go 20% per year, what's that worth to you? Everything is the present value of all future cash flow. At some point, you have to understand that and realize that's what you're buying, and your job is to pay as little as possible for it. If what I'm saying speaks to you, please watch our next video on our 8-pillar process so you can understand better how we look at companies. Thank you very much. Don't forget to subscribe.